Hey everyone, this is Avi Harkishin. This is what I'm looking at for GameStop. So the first thing that I want to call to your attention is this supply zone right here. That has been a major supply zone for GameStop, and I don't think it's attempted to break that supply zone several times, and it has gotten rejected. On the bright side is that whenever a stock keeps trying to break a supply zone, at some point it's going to break the supply zone, but it might not happen within the first, second, or third attempt. So GameStop attempted to break the supply zone again, but it got rejected, which looks sort of like an inverted hammer candle from the top. That's an increased volume, which signifies that the price of the stock may continue to drop a bit more. So you have to look at different levels below that supply zone that might be a level where the price might be heading towards. So the first thing I'm looking at is this supply zone right here. Now we are trading just within that supply zone. Bearish case scenario is that GameStop, it already filled that retest or gap fill that I had, which is 31.14 right there. Now, the bullish case scenario is that it continues to trade above this level on increasing volume, 32.20, and it hits above 33.10, and it begins to push up. The bullish case scenario is a 33.50, a daily close above 33.50, and increase volume. I expect the price to keep pushing towards $40. Bearish case scenario, which I favor a bit more, and I'll tell you why I favor a bit bearish case scenario in this situation, because GameStop has done this before, and because of technical analysis and the rules that I follow is because, one, we are trading, the first thing is the candle. It's like an inverted hammer candle, which is bearish with increasing volume. It attempted to break above this supply zone. It got rejected really hard. The price fell below the supply zone. It's currently fill that retest or gap right here, and it's trading right here. However, there is a 4-hour fair value gap right here at 29.70, 28.92. Stocks tend to fill their 4-hour fair value gap once they get rejected. Lots of time they tend to do it. So I have to go with the probability of GameStop filling that fair value gap. But if it stays above here, it may not fill that fair value gap. But if it continues to trade just below this supply zone, or it breaks below 31.14, it may fill that fair value gap. Now, once it fills that fair value gap, bullish case scenario is seeing it fill that gap and it starts to push up again. But there is that 27.50, which has been a major zone for a very long time that acted as a resistance. And it's very likely GameStop come back down to at least that 27.50 to test that zone. And if it could form support in that zone, perhaps it'll start creating a trading range between 27.50 and this resistance or supply zone right here until it breaks out. There's no certainty that I'm telling you, oh, it's going to do this. I'm looking at levels so that you know exactly what I'm looking at. I am long shares. I am not in any sort of option position here because there are no certainty on the direction of this stock at the moment because there's a fair value gap there. So I have to be cautious of GameStop coming down and filling that fair value gap. And looking at MACD, which is kind of curving down a little bit, it's very possible that GameStop will come down and fill that fair value gap. Look at the 2 hours as well. What I like on the 2 hours is that we see it found a little bit, buyer stepped in, it closed above the retest fair value gap, the retest and gap fill right there. However, if you look at the 2 hour here, that volume is much more that's pushing the price down, the rejection. So it's very much possible that you get something like this, an ABC correction or retracement. This is the ABC retracement that is possible. So you have A, which is right there. Then you come down, that's B. A, B, and C. That's a possibility if you're looking at Elliott wave, which is right at the fair value gap, the 4-hour fair value gap, which is also a 2-hour fair value gap. And you have the 200 EMA right down there. Now, the level is 30.28, which it could come down to, but if it's going to go this much, 30.28, I think it's just going to fill that fair value gap, to be honest with you. That's a possibility. I am more inclined to believe that is going to fill the fair value gap at 29.70 to 28.92, which is the 4-hour fair value gap. Now, you don't have to take this analysis and make any financial decision. I'm just letting you know what I'm looking at, and hence, this is the reason I will not enter any sort of option play on GameStop. And it's a weekend. It's Friday. Market's going to close the weekend. I'm not going to hold on to any sort of option contracts over the weekend. All right. So I hope that was helpful. And the fibs you're looking at here is an extension. It tends to do on a C wave. The first level is the fib extension 1, and then you have the fib extension 1.618, and you have all the way down here, which is that 27.50. So I think fair value gap is very likely to be filled. So bearish, bullish case scenario, I've given you both and my reasons why. Hopefully that was helpful. All right, enjoy the weekend. Take care. Bye.